Hi, Richard Berman here in conversation with Tim Ray, CEO of VeriFast. Tim, thank you so much for joining, and thank you to the CityBiz audience for giving us your time in listening to this conversation. So, Tim, as a first question, can you give us a little bit of a background on what VeriFast does and what exactly you do in the prop tech space?
Thanks, Richard. So VeriFast is the only all-in-one verification platform within the PropTech space. Our superpower is focusing on verifying identity and financial data for applicants as they apply for rentals. And what we are excited about is that we are the only one that does both open banking and open payroll powered platform with the waterfall that also allows people to upload their documents for both data extraction via OCR and also fraud detection to make sure the validity of the PDFs. So really, we're the only all-in-one platform that does allows all applicants to count and verify total income, not just their payroll.
Great. So, what is the difference between fraud prevention and income verification? I know they're related and they sort of live in the same orbit, but they are different from each other. Could you explain the difference between those two concepts?
Yeah. So I mean, quite frankly, if you were to think of when people apply to an apartment, there's really three different end states. There is people that voluntarily like opt out of the process, people that get rejected for fraud, people that get rejected just for not meeting their credentials, which is primarily their income levels, and then people that get accepted. If you look at the subset of people that apply and don't get approved or don't move in, fraud prevention is just a small subset of the total number of people that don't get accepted overall. And what we're focused on is accurate income verification, which means that we're focused on making sure that all their various deposits and income sources are properly accounted for to maximize approvals. And accurate income verification really includes fraud prevention, so making sure no nefarious or illegitimate income sources are being included in their process, which would be their doctored pay stubs or bank statements.
Great. And how big is this problem? I know this isn't an isolated thing, but how prevalent is it in the industry and what kind of problems does it cause for property owners, property managers, as well as residents and prospective residents?
So if you think about the total number of evictions in the United States on an annual basis, it's about 3.6 million evictions annually, with a crude estimate of about $10,000 in the cost of per eviction, both in the cost of like lost rent, enforcement, and repairs to turn over the unit. But that number can vary drastically from jurisdictions where we have up to a year because of backlogged court system to get people out, where you could actually get to like $30,000 or $40,000 per unit, to more efficient states, maybe like Texas, where you could get them out in maybe 3 weeks, and it may be less expensive in that case. But so if we were to take that crude numbers of 3.6 million units times $10,000, for instance, that's a $3.6 billion cost to the economy every year. Half of that is caused by fraud. Half of it is because just people just can't pay rent and they're just making honest mistakes or just bad behavior. But actually, half of it is based on nefarious people getting into units that they just can't afford.
Great. So, how did you come to the realization that the need for better fraud protection is really just a symptom of poor income verification processes?
I think we think about there's three things that are happening today across the economy that are a really good conversation starter. We have inflation and cost of living, which is outstripping people's incomes. We have that in combination with our traditional, rent to income ratios that people go by, which is traditionally it's a 3-to-1 income to rent ratio. That ratio is becoming harder and harder for people to attain as a result of that, especially in the 9 to 5 scenario. Now we have a lot of people then trying to do secondary and tertiary jobs, alternate income sources, become self-employed. And those income sources are increasingly tough to prove because they don't have, a pay stub, something nice that, a leasing agent would be used to seeing. As a result of that, there's this need for people to do what they can to get approved for a rental. And so you have this burgeoning economy of, two types of fraud. One is people are doctoring documents for themselves using like a PDF editor to submit false documents. But then you also have professional fraudsters, organized crime, which are actually creating full on, fraud kits with like full on IDs, income, employment, even like fake references using call centers. And then we have the proliferation of of social media, where those are becoming distribution channels for the fraudsters to be able to basically market their businesses, like Reddit or TikTok. And so the combination of the need, i.e., people can't afford to rent based on our old traditional scenarios, the ease of use for fraud and the evolution of technology, which is making it easier and more user friendly for people to do fraud, and the combination of the distribution and the marketing through social media makes it for this um, peak uh, peak need for the solutions that we provide today. It's no longer a nice to have. It's really, I call it like steak and potatoes technology that people have to have. Otherwise, they're going to lose a lot of money.
So this leads into my next question, which is if there are so many issues around pay stubs, and there's so many shortcomings around them, whether it's accuracy or even intentional fraud, why hasn't this problem been more obvious to property owners and managers over the years? It seems to be something that exists but isn't necessarily flagged as a high level problem.
I think recently, there's a recent report that in a survey to property management companies that, how many property managers have experienced fraud. And I think 93% of the surveyed property managers have now said that fraud is a problem and that they do experience fraud. And so I think historically, if you go back, pre-COVID, I think that, you're right. That it wasn't as urgently perceived a need to be able to address this problem because the losses just weren't quite as exaggerated as they are now. But I think COVID has accelerated the issues, which is, now we're having the COVID hangover in terms of still like the lag times and, depleted resources to be able to handle the backlog.
So, why do you think we are seeing a rise in fraudulent reporting of income? You mentioned COVID and the post COVID hangover, but what are some other reasons why this trend is moving in the wrong direction?
Well, I think it's the things I just explained with regards to the three pillars of like need, ease, and people being able to teach each other. The difference between before and now is that as soon as somebody finds a new loophole, then they're easy able to teach and coach others in the same condition on how to basically exploit those gaps as well. So you think about a traditional market, maybe Atlanta, which is the highest fraud markets in the country. Um, as soon as you have let's say an area where most buildings are starting to adopt fraud prevention and like I said, accurate income verification using open banking technology, um, the fraudsters are actually coaching their clients, the applicants, on where to apply. So then that actually compounds the problem for the buildings that are slow to adopt because they're the ones that are getting hit the most. So it's the weakest link, which is actually becoming increasingly the target of these fraud scams.
Great. And what are the signs that a prospect might be a better or worse risk than a pay stub would indicate?
Yeah, so a lot of applicants don't have a pay stub. They're having, let's say, they're retired. They have asset accounts, retirement accounts. They might have government benefits. We're going to see all of these deposits and balances through them connecting their accounts in real time to their basically like a new immigrant. Maybe they're working like 2 or 3 jobs. They're doing Uber. They're doing some sort of part-time work. They're hustling. They're doing what they need to do to put a roof over their head. We can see recurring deposits into their bank account. What tells us whether or not they're like a really good applicant is if we can see recurring deposits in their bank account, whether it's a pay stub, payroll, or if it's even things like Venmo, PayPal, Cash App. And there's a length of history, and we see that there's actually like proof of life in the account, i.e., there's like merchant activity, like your utility bills, your rent, your Uber Eats, all the kinds of things that we would want to see from a regular person. Those types of that type of transaction history. That tells us it's a real person. What's a red flag is where we see maybe recurring deposit history from things like ATM deposits and or e-transfers, but then it's e-transfers that are coming out the other way, and that's a telltale sign for like inception fraud and fraud in general, where people are just moving money and trying to show recurring deposits, but the point is that the funds have to go back to the source of origin eventually. And so the only way for that to happen is if the money gets transferred out in terms of like a non-merchant expense.
Great. So, it's 2024. Everything is AI. It's the trend that every company is involved in. Um, what is VeriFast doing with AI, and how is that helping you improve your ability to reduce fraud and reduce risk for property owners and managers?
Yeah, it's a great question. We're using AI would delineate between like AI and machine learning. There are two buzzwords that people like to throw around a lot. In terms of AI, we are starting to leverage the tools that are out there with regards to ChatGPT 4, Llama 3, all the big players. As in terms of like how do we extract data from documents in a very efficient and accurate way to reduce, as a really good waterfall for when people can or cannot don't want to or can't connect to a bank account. If somebody has a small credit union that may or may not be listed by Plaid or MX or Finicity or any of the other bank connection aggregators, which we use all of them. We do need to have a waterfall solution so that we can make sure that we can handle all applicants. So we're using AI in terms of data extraction. We're using AI in terms of fraud detection to make sure that we can see whether or not the documents have been tampered, both from the backend metadata as well as the fonts and structure and consistency of the document from known examples. And then, quite frankly, we're also using AI in terms of like our facial match recognition in our biometric scan for ID verification. So those are the two key components there. And then we're using just a ton of machine learning models to help us with like basically teaching our algorithms how to recognize when a recurring deposit is income versus just e-transfers, when maybe it's somebody works at Red Lobster versus just a reward deposit to their account. These are all the kinds of things on scale that you have to teach our algorithms to make sure that we can have accurate income verification, not just a rounded up version of all their deposits on a recurring basis.
Great. So just a couple more questions. And one of the big ones is, couldn't property companies just get the bank statements and do this themselves? In other words, get the bank statement, go through it, flag problematic or potentially problematic transactions, put it all into a spreadsheet and do the risk assessment that way? What is the advantage of working with VeriFast as opposed to doing that manually?
Yeah, I mean, two things. One is today banks are doing all this underwriting manually, and they're thin slicing through to only do try to find the most critical transactions that they can to get the data that they need, and it's a manual process. A lot of banks or other companies that try to build all their own tech end up doing it all pretty, I would say, subparly because it's not their core business. And VeriFast eats and breathes data, bank data, income, fraud data for breakfast. That's like what we do. That's like our superpower. That's the only thing that we're obsessed about is making sure that everyone's income counts and the people that are trying to fraudulently pass through the process get flagged and stopped, right? And so naturally, as a best in breed solution, that's why banks would rather work with us, is because they're able to get the best solution, not trying to build something from scratch and maybe not have thought leadership in the space.
Great. And as a final question, and thank you so much for your time today. And obviously, thanks to the audience for listening to this. I think you've touched on a lot of important topics. Um, with all of the changes going on in technology and in the multifamily industry, what excites you the most about the direction that the prop tech industry is headed? and more specifically about the role that VeriFast is playing in the prop tech world and the property ecosystem at large.
I think there is a big recognition in the changing demographics in just the profile of renters in terms of, you know, as our gig economy continues to proliferate, our younger generations are continuing to become more self-employed, have multiple streams of income, and realize that a pay stub is not the be-all and end-all of determining people's like income sources. I think that the evolution of like a credit check based first system to a cash flow underwriting based system, where a bank account is really looking at someone's ability to pay based on their real time financials. A credit check is looking at a historical out of date reference to someone's willingness to pay. Key differentiator. Key differentiator here: ability to pay in real time versus willingness to pay historically. They're both good. They're not replacements for each other, but the ability to pay has always been done manually, um, historically, and now that we're getting real time financials, we're able to do ability to pay first with the historical context of willingness to pay as a secondary, not the other way around. Historical willingness to pay has always been first, and ability to pay has been second. It's we got the cart before the horse here. So what I'm super excited about is the transition and the swapping of which is the dominant tool as the first past the post before we do the other.
Great. Well, that answers all the questions that I had today. Thank you so much for your time, and uh, best of luck moving forward in helping limit fraud and improve the rental and purchase process for people.
Thanks, Richard. Cheers.